Morning, everybody. It's the 25th of May. I'm Joe from Signal Centre. Talking ball this morning. No Steve. He's enjoying a mini break. So I hope you are nice and relaxed wherever you are, Steve. Okay, let's get into it then. Plenty of headlines in the markets at the moment. As always, if there's any requests or people want me to take a look at certain markets, please feel free to post them up in the chat and I'll get to them when I can. Okay, headlines first up then. So, German business confidence edged lower yesterday. The German Ifo Business Confidence Index dipped to 91.7 for May from a revised number of 93.4 the previous month. And this is also below the consensus forecast of 93. There was a small decline in the current conditions component and a steep retreat in the expectations component. Fed's Waller said that June's decision will be data dependent, stated that the decision whether or not to raise rates in June will depend on the data releases over the next 3 weeks. He added that prudent risk management may suggest skipping a rate hike in June and lean towards a July move, depending in inflation data and whether credit conditions have tightened excessively. There were, however, some divisions in the minutes. According to the minutes from May's policy meeting, several members stated that further policy firming may not be needed if the economy evolves in line with their expectations. Some participants, however, considered that additional firming may likely be warranted. Participants also agreed that inflation was unacceptably high and declining slower than expected. Markets on balance back a June pause. The futures markets are now indicating just over a 70% chance that the Fed will hold rates steady at the next policy meeting. As a result of all of this, the dollar continued its move to the upside. It's now at a fresh 2-month high. It weakened at a time on Wednesday, but held firm overall due to expectations that the Federal Reserve would maintain the hawkish policy. Markets are continuing to price in more Bank of England rate hikes following the latest inflation data that came in quite a bit hotter than expected yesterday. Markets now priced in at least 2 further Bank of England rate hikes to 5% and potentially 5.25% in the coming meetings. We've got US jobless claims data due out today. This will be watched closely. As mentioned from the Fed, any data point really is live at the minute, and all are being considered for the next 3 weeks with regards to whether or not they're going to raise interest rates further. The consensus forecasts are for an increase in claims to 249,000 from 242,000 in the previous month. Also, some further discussions with regards to the debt ceiling. House Speaker McCarthy stated that a deal in principle could be agreed over the weekend, but 2 ratings agencies warned that there would be an impact on the US credit rating. So that has spooked markets a little bit over the past 24 hours as well. So let's get into some charts. I'm going to run through a fair few of them. Again, if there's anything that's missed that you guys want me to check out, please feel free to post it up. I'm going to start with cryptocurrency. So first of all, we're going to take a look at this weekly chart on Bitcoin. So prices were trapped within a range throughout this period here. This was back in 2021. We eventually saw that breakdown in June 2022 and also a break of the uptrend line. So the retest that's taken place in recent weeks has simply just rallied into these previous lows, which we expect would act as resistance. It's also the reverse side of this broken trend line. So pretty significant stuff on the weekly chart there, suggesting that maybe Bitcoin is facing some pretty stiff resistance at the minute and may continue to roll over to the downside, obviously not being helped by a stronger dollar as well. If we take a look at the daily chart, Steve's been talking about this for a while, this head and shoulders top formation that seems to have taken shape on the daily chart. We saw a breakdown through the neckline here on the 11th of May. And since then, on subsequent retests of that neckline, we've seen prices continue to find resistance and head lower. Yesterday, a pretty negative session all in all, posted a bearish engulfing candle, pretty negative, the lowest close we've seen for a significant period of time, going back to mid-March. And we are slightly on the back foot with that again today. So looking a little under pressure. We do have some support close by at 25,138. So maybe that'll provide some short-term relief for the Bitcoin bulls. I'm just going to leave it there on cryptocurrencies and move on now to commodities. Let's take a look at a few of these. Let's take a look at oil to start. So overall, the trend remains pretty negative here. We can see prices continue to trade within a bearish channel. In recent sessions, we have seen a little bit of an uptick, but that is now facing resistance around $78. That's on Brent oil. and above that we've got obviously the upper end of the channel to consider as well. So at the moment, looking like it's remaining under pressure. We do have some support around here at 71.52. We can see that on the horizontal level there, 71.43. So in the short term, maybe likely to be range bound, certainly trading towards the upper end of that at the minute. Our analysts today are suggesting a sell at around 80.10. Quick look at crude, pretty similar. We can see here trading in this bearish channel. We've got a sell order here a bit higher up at 75.15 today. We can see there is some horizontal support lower down around 64.33. So ultimately that would be the sort of target area where we're looking for prices to go to in line with this bearish channel. Okay, let's take a look next at silver, see what's happening here. So we can see here there's significant resistance, an 88.6% fib level, not often used in the market, but we can see here on this occasion it's done a pretty good job at repelling prices. So we posted this reversal candle here on the 5th of May, and then we saw this pretty negative candle on the 11th of May, a big red candle taking out these previous support levels at 24.49, and prices have continued to move lower ever since. So that looks to be in corrective mode at the minute. In terms of where it's going to head, we've got a fib level at 50% here at 22.99, and prices have come into that level this morning and posted a minor reversal, still very early in the session, but that may provide some temporary relief in the very short term on the daily chart with regards to silver. Let's take a look at gold. That's also on the front foot today. Gold and silver kind of tracking each other, both up by 0.9% as things stand. So we know with gold, there is a significant area of resistance here at 2070. This was a previous swing high from back in March. We rallied into that level before posting a reversal. And now it looks as though we may be forming a bit of a short-term top here on gold. We can see we've got this kind of rounding price action that's taken place over the last few weeks. We saw an indication of this on the 18th of May when we broke down through these previous swing lows from April at 1969. We've broken through that level. The retest has overshot it a little bit, but not really giving us enough encouragement to suggest that this is going to continue moving higher in the short term. So we've got now support at 1952. That looks as though it may come under a bit of pressure today. We've got these weekly jobless claims numbers, as well as a few other data points out today to be aware of, which may tilt this one way or the other. But the bias for now, given that we've got this kind of rounded top formation and we've broken through this support at 1969, for me, I think we could see lower prices there. So do be careful if you are trading gold. Okay, moving on to FX markets. Now, going to take a look at the dollar index to start with. As mentioned in the commentary, we are now at a 2-month high. So we started off a little bit lackluster this morning, but we're now starting to find our feet yet again with the dollar index. Another push to the upside today. So this is the highest price that we've seen since 17th of March. Looking pretty strong indeed. We can see here we've got massive support at around 100.82. We broke through these resistances at 102.83 and now pushing higher to the upside. In the short term, we can draw some fib levels on from this swing high on the 8th of March down to these lows that we posted in April, and we can see this morning we're actually pushing through this 61.8% fib level as things stand. The next level above is the 78.6, which comes in at 104.80. Obviously it's very early in the session, so we would ideally like to see this close above the 61.8% to suggest that this hasn't provided any resistance. So there is still a chance that we may see some selling interest today around that level, but at the minute it looks to be very much on the front foot. Now this could be shaping up for a much larger pattern over the longer term. It's still got plenty of work to do, but obviously we've got these two bottoms down here, which indicates that we may be in the process of forming a double bottom pattern. Now in order to complete that pattern, we need to see a break of this neckline, which is all the way up here at 105.86. So again, a fair amount of work still required. In terms of that as a percentage, we're looking for another 1.67% to even challenge that neckline, and then we'd need to break above it on a closing basis to confirm that. But if that does indeed go on to play out, then the long-term picture for the dollar index, the measurement of this potential double bottom pattern, takes us all the way up to 110.94. So pretty significant stuff. Clearly at the minute it's very much on the front foot. spooked by what we've seen with regards to the debt ceiling and obviously the prospect of further rate hikes in the coming months and hotter inflation numbers, particularly in the UK, not necessarily directly correlated, but maybe an indication that inflation isn't going away as quickly as the policymakers will like. Okay, let's take a look at Euro US dollar. So expecting to see the flip side of what we've just seen on the dollar index, and that's exactly what we get. So we've seen a channel formation here that was in place for a significant period of time. We broke down through that on the 16th of May, and since then prices have continued to move to the downside. We've seen 3 consecutive negative sessions, assuming that today stays on the negative side. And in terms of the next level of support, well, we can look at some fib levels in the short term. We can go by this swing low from the 15th of March to these highs on the 26th of April. And like we saw with the dollar index, we're breaking through that 61.8% fib level as things stand at the moment. Obviously, want to see that on a closing basis if we're going to continue this negative bias. Below that, we've got a 78.6% fib at 106.40, and then we're into this major area of support down here between 104.99 to 105.53. And again, raises the prospect of a potential double top here. Still very early to call this because in order to complete a double top, we need to see a break of the neckline, and we don't have that yet. But just kind of thinking and planning maybe longer term, if this does go on to complete, it would suggest that prices may head down towards 99.65 over the medium to long term. Still plenty of work to do there, but certainly at the moment it is on the back foot and looking pretty negative. Let's take a look at cable, see what's happening there. So we've seen this break of trend in recent sessions. That occurred on the 18th of May. So from these lows that we posted back when that budget decision was made in September last year, we've got a decent uptrend in place. We've seen a break of this uptrend now, and prices are starting to move to the downside. 3 consecutive days. On a closing basis, potentially 4 today if we close in the red. We've got some support here at 23.43, which is being challenged as we speak. So we need to see this hold if we've got any prospect of prices continuing to move to the upside. The fear I have is that this is a kind of a rounded top formation, which is pretty negative and may suggest that we will see a continuation lower over the short to medium term. But we've got support of 123.44. We need to see how that reacts today. But at the moment, it's looking pretty negative. And given that we're seeing that strength in the dollar index, we may see a bit more pressure there. Okay, let's take a look at some other majors. Let's take a quick look at dollar yen, see what's happening there. As we would expect, dollar pushing higher. This is doing the same, although it is right into a 50% fib level now. So from these highs that we posted back in October last year down to these lows that we posted in January, we're now at a 50% retracement level. We've broken through resistance here at 137.91. We saw a nice retest of that before buyers continued to push this higher. So interesting level today. We may see more consolidation here in the short term. But if we can break through that 50% level on a closing basis, then it's likely to trigger further gains in the short term. So looking pretty strong on that market. Let's take a look at these commodity currencies. Aussie US dollar looking quite interesting. Prices had been trading within a range here between 65.67 to the upper end at 67.93. We saw a strong reaction from the upper end of the range down to the lower end, and we actually broke down through that level of 65.67 yesterday on a closing basis, but we're now just into a big cluster of support. We've got a 61.8% fib level and also a neckline of an inverse head and shoulders that completed back here in November. So interesting level, potentially an opportunity for a speculative long trade, but we have broken down through a range here. So it's a bit mixed on this at the minute, and looking pretty pretty rough really if following the break of that range. So let's see how that plays out today. Let's also take a look at New Zealand dollar versus the US dollar. So this is threatening to break through these swing lows from the 8th of March. We're right into that level at the moment. We've got a bit of a channel that had formed here. Big breakdown yesterday on that. So looking pretty bearish, and we are continuing the weakness this morning. Below that, we've got a 50% fib level at 60.25. So let's see how that plays out. A couple of requests on New Zealand dollar, Japanese yen, Canadian dollar, Japanese yen, and also sterling Oz. So let's get to those. Let's take a look at sterling Oz to start with. So this is looking pretty strong indeed. So sterling overall holding up quite nicely. Obviously, we just looked at it versus the dollar, which was a bit of a different picture because the dollar is so strong at the minute, but we're not seeing that kind of strength in Aussie at the minute. So sterling is the dominant pair at the moment. We can see here it's trading in a decent looking uptrend. Prices have moved higher over the last couple of sessions following a brief period of consolidation. We can see here there was a bit of a consolidation period. Let's just get that drawn on. Maybe a bit of a pennant or a flag formation in the short term here. We've broken up through that and prices are moving to the upside. The next resistance level, we've got these swing highs from the 28th of April. The high comes in at 1.9035. Above that, we've got that thick blue line, and we can see here there was multiple touch points back between August 21 to January 22. That comes in between 91.54 to 92.21. So looks to be, I reckon, pretty good for a continuation higher into these levels to test that. So looking pretty strong and pretty bullish overall on sterling, sterling Oz. Also, let's then take a look at these yen currencies. So this is New Zealand dollar versus Japanese yen. So prices were trading within a pretty well-defined range for a significant period of time. We saw a big break to the upside on the 17th of May, taking out these previous swing highs before prices eventually topped out at highs of 87.30. Then there's been a pretty substantial pullback over the last three sessions, but this is now back into what was previously resistance and now it should be support. So potentially an opportunity there for the bulls, given that we've seen this pretty decent move to the upside, a nice pullback into these newly formed support zones. So potentially an opportunity there to buy for a move higher in line with this kind of short-term move that we've seen. Ultimately, though, however, it is trading in a much longer-term range, and we see prices come up just shy of a retest of these highs. So on the longer term picture, you could argue that it's pretty much mid-range. In the shorter term, you can make an argument for this being another range which you've broken through and now getting a retest of. So kind of back into the middle of this longer range, potentially an opportunity there on the long side, I would say. Let's take a look at CAD yen. And we can see here that this was a very significant area of resistance. We formed a large top. We broke down back in December. Prices then stagnated and moved to the downside before eventually finding support around 94.63. The rally in recent weeks come up into this newly formed area of resistance. We then broke through that on the 17th of May and have remained above it since. So pullbacks, the sort of wicks of these candles that you can see following the breakout have typically attracted buying interest. So overall, I would say this looks pretty bullish, and therefore buying pullbacks into kind of 101.41 to 101.65 into this area here, and also this short-term uptrend would be the preferred bias on CAD yen for the time being. So this is looking pretty bullish for me in the short term. Also, a request to take a look at Euro yen. So Euro yen was trading in a big range. We broke out on the 28th of April. There was a pretty sharp pullback, but that looked to be just a wedge or a correction, or ultimately a continuation pattern to the upside following the push high we saw on the 15th of May. That was a really strong move to the upside, and prices have continued to push higher since. It's been a bit choppy the last few sessions, but overall looking pretty robust. So on the daily time frame, that looks pretty strong. Let's take a look at the intraday there. There was a request from Mark to take a look at that. Sorry, my charts are a bit messy here. Let's just clean that up. Potentially forming a bit of a double top, and I can see what Mark's saying there. Needs a bit more work though. In order to complete the double top, we would need to see a break of a neckline, and to be honest, the neckline probably for me would be around 148.86, because we can see there is a significant area of support there. Multiple tests at this level, not exact, but a range, you know, kind of between these areas here, 148.72 to 148.86. So in the short term, maybe a pullback is on the cards into this area here. If you want to go with this as a top pattern, you would need to see a break of these levels, at which point that may trigger further declines. And we could be looking therefore for a measurement of somewhere in the region of 147.62 as a measured move of that potential double top pattern there on euro yen. But yeah, I'd agree, not looking so healthy on the hourly chart, but that pullback into kind of 147.62. Where is that on the daily? Let's take a look. 147.62 is kind of a retest into this previous what was previous resistance, which now should act as support. We can see the range here is a little bit larger, but overall I still think on the daily it's looking pretty robust there on euro yen. Okay, thanks for the request, guys. Hopefully that was useful. Let's move this on to indices then, because it's looking pretty interesting in that space as well. Let's start off with the European markets. Let's start off with the DAX. So we know from the commentary that Steve's been giving us on this lately, this is into a major area of resistance, a number of highs going back to 2021 November and also in January 22. We can see we've rallied into that level after a substantial move higher, and we've come up a bit short. So in the last 4 sessions, we've seen weakness. We're on the back foot today, currently trading pretty close to the session lows and also the lows of yesterday's session. So coming under a bit of pressure here, potential for a bit of a correction. In terms of where this could eventually go to, we can always refer to these fib levels as a good indication of where ultimately corrections may go. We've got 38.2% fib level down at 14,605. So that's pretty chunky indeed, given that we've seen a big move to the upside. But ultimately, moves towards 38.2% fib levels are generally considered quite healthy in the grand scheme of things. We've also got a trend line here, which today is coming in at around 15,472. So that may provide some support as well in the short term. Let's take a look at the FTSE, because that was probably one of the worst performers yesterday. Charts again a bit messy here, so let me just clean these up. So there was a significant level here which we broke through. So let's have a look at this, breaking down through some key supports over the last few sessions. So we had these previous swing lows from the 4th of May and tested it again on the 11th. Yesterday we saw a big breakdown on the chart there. This was stoked by this inflation number that came out yesterday, which was much hotter than expected. Again, trading pretty close to the session lows today already and pretty close to yesterday's lows. There was a decent bounce off of that eventually, but it looks as though it's under a bit of pressure, potentially a big kind of rounding top formation taking place here. We've got major support down here around this region at 72.96, and that would be a hell of a double top if we go on to complete that. A really big one indeed, but still lots to do before we can get excited about that. In the short term, it looks like resistance might be found at 76.89, so selling into retest of that level might be the preferred strategy in the short term there with the FTSE. Let's take a look at the US markets. Start off with the Dow. That's coming under a bit of pressure as well, following the sort of threats about this debt ceiling situation and threats to the credit rating in the US. We can see prices have been quite range bound. We've failed at the upper end of that range in recent sessions. On the 1st of May was the last time we saw the retest at around 34,295. Prices on the decline, moving to the downside. We've got major support around 31,711. So looking under pressure there with the Dow for the time being. Let's take a look at S&P 500, which is typically the better market to look at in the US, because of course it's a much broader index than the others, being 500 stocks as opposed to the Dow, which is only 30, and the Nasdaq, which is 100. So resistance here at 4195. We rallied into that level on the 18th and 19th of May and have stalled. Still holding up pretty well compared to the Dow. Obviously, if we can break through these levels, then that may confirm some sort of bottom pattern. Prices have been kind of consolidating now for a long period of time, a big rounding formation potentially taking shape here, but still got a bit of work to do before we can get too excited about that. And we've got, obviously a short-term uptrend in place here. So a pullback potentially into this kind of level here before eventually then going on to break through could potentially play out. So still a bit of work here to do on the S&P 500. Looking at Nasdaq, so tech stocks are performing pretty well at the moment. To be fair, we can see that when we broke out through this downtrend back in January, prices have been pretty strong ever since. We've now rallied into these previous resistance levels from the 16th of August at 13,751, and we saw a break through that level on the 18th of May. We've seen some choppy price action since, but ultimately the buyers seem to be pretty willing to buy into retest of this newly formed support. Yesterday, we saw a pretty impressive session, to be honest. We made a move down to around 13,530 before then storming back and closing at the highs of the session and still trying to put on some gains today. So that's looking pretty good. We've got this red line here of resistance at 13,953. If we can break through that, then that may trigger further gains towards 14,777. So overall, NASDAQ looks to be the best performing market in the indices at the minute. So if you're looking at stocks, it may be tech stocks that you want to focus most of your attention on at the moment because they are clearly outperforming everything else. Okay, no more requests on the indices, so I can move on to the gun to the head challenge. So this is where Steve and I pick trade ideas live on the stream as if we had a gun to our head. A few basic rules that we need to follow. Obviously, we must have stops and targets. That is a given. We must have risk reward ratios that are better than 2 to 1. These ideas will close out at 9 p.m. unless the stops or the targets are hit in the meantime. And we risk 1% of trading capital on each of these ideas. So we've got a live account that we're running. You might see it down on my screen here. We've got a tab for Awanda Live. So this is where our account's set up. Our balance is at 1975.31. We started off with 2,000, so we are down around about £25 from where we first started. We've had a bit of fun in the process. And we are just picking these ideas, as I said, live on the stream without too much thought going into them or planning. We're just picking something that we feel has got the opportunity to make a return between now and 9 o'clock tonight. We can take a quick look at the transaction history to look at Steve's trade yesterday. He was trading cable, sterling, US dollar, and he was selling that. So there's a buy on there because obviously the trade idea was bought back to close it out. And he made £38.30 yesterday. So just under 2R on that trade. Well done to you, Steve. So now I've got to pick a new one. And there was a few bits that were interesting me on the flick through that I had this morning. One of them is actually Aussie dollar, scarily enough, because obviously we've just talked about dollar being very strong indeed. But I've highlighted this area. This blue line has been on my chart. This blue box has been on my chart for a significant period of time, expecting prices to get here. And now it's here. What do? Do I look to buy it based on the fact that I've previously highlighted this level, or do I get put off by the fact that we saw a pretty negative candle yesterday on the breakthrough that support level at 65.67? If we scroll over to the left hand side, we can see this inverse head and shoulders that formed, big break to the upside, that then formed this neckline, which ideally should act as support on a retest, and we haven't really seen a retest of that level. So I am going to be ultra speculative today and try and speculate on a bit of dollar weakness, given that we've seen such strength in recent sessions. So I am very much going against the trend here and looking to be a contrarian on Aussie US dollar. Taking a look at the hourly chart, let's clean this up. We can see that prices, looks like a bit of a ski slope at the minute, but potentially some indications of a reversal. We can see this candle that posted between 7 and 8 o'clock this morning, offering a little bit of hope. If we go all the way back to the left-hand side to try and find that level that interested us from back in this period here. So this is from November. We can see here this inverse head and shoulders, got the left shoulder, got the head, got the right shoulder, and the neckline coming in somewhere around here. 65.22. So if we go back to the right hand side, does that correlate with what we're seeing today? And yes, it does. We can see it's pretty much slammed directly into that level and had a little bit of a bounce. So highly speculative, but let's go for it. I'm going to buy the Aussie dollar pair. So going long of Aussie, short of the US dollar, and going to target a move higher into this region here. So looking for about 2.6 as a risk reward ratio. Want to get this trade on. I bet I'm not looking at the right chart. AUD, US dollar. I need to do that on a Awanda because that's where I'm placing the trade. Redraw that on. Let's go from there with a stop loss somewhere around there, targeting move into that area there. Just give it a little bit of room. Okay, let's get this on, shall we? Where's the trade? Can I get a trade ticket up here? Trade, create new order. Okay, so my take profit and stop loss activated. I'm going to take profit at 65.94. Going to have a stop loss at 65.11. 65.11. I'm going to risk 1% of the trading account. So we can see here, risk reward ratio 2.97. Got all the levels in there. That's the amount of units that I'll be buying. Let's get that on. Buying at market. Trade is on, executed. We can see it now live on the chart, going long of Aussie US dollar. As mentioned, highly speculative, but hopefully you can see the reasons behind it based on the historical support level that we have fallen into over the past 24 hours. Okay, trade on. Let's have a look at the data that's due out today, just to give us a bit of an indication about what we can expect. So we've got US GDP, which is due out later today. Q1 second estimates, and we've also got weekly jobless claims due out at 1:30. And what else do we have? Is there anything else? I think there were a few other bits. So next week we've got some more inflation numbers in the US, the US PCE prices index. Pretty sure there was some sterling numbers out today as well. Let's have a quick look. So monetary policy statement today from the Bank of England. I don't know why that's been missed off. And obviously we've got the interest rate decision as well. Sorry, I'm looking at totally the wrong date here. That could have got me in trouble. Yeah, so it is just the preliminary GDP number and the unemployment claims for today. Wrapping it up now. Thank you for watching, everybody. I'll be back tomorrow. And until then, have a great day and speak to you soon. Bye-bye.